Hi everybody, Thomas at Rebel Income here. The materials sector is a pocket of the economy that I like to pay a lot of attention to. That's because the companies that are in it produce the raw materials and solutions that just about every other sector of the economy uses to produce the finished goods and services that we as consumers use every single day. That's especially true when you think about companies like Dow Incorporated, Eastman Chemical, and the stock that I want to talk about today, DuPont. These guys supply materials and solutions to a wide range of end markets, like semiconductor and integrated circuit fabrication, water purification, medical packaging, building materials, auto adhesives and fluids, and a whole lot more. The stock is up about 13% over the last 2 months, and it's just a few dollars away from its 52-week high. That begs the question of how much opportunity is left if you're looking for a short-term trade. And certainly if you're like me and looking for value-based opportunities in the market, it really begs how much opportunity is left and where is the stock relative to its actual bargain price. Well, the answer to those questions just might surprise you. So let's go ahead and let's dive in. As already mentioned, the stock has picked up a lot of momentum just in the last couple of months. It hit a low point at the beginning of November at around $67 per share and has rallied since then to its current price as we move into the holiday weekend at right around $75.50 per share. It's also only a few dollars away from its 52-week high, which is right at around $78 per share. Technically speaking, that means that there may not be a whole lot of room left. We've seen the stock really lift off of and move away from the short and long-term trends that we'd like to define with, say, for example, a 20-day or a 200-day moving average, which we can see down here. The stock has really accelerated past those levels. That means that a lot of that momentum may be due to fade and that the stock may be due to begin to retrace a little bit. So I'm not sure there's a great opportunity to buy if you're looking for a short-term trade right now. The default mindset for most value investors when they see this kind of a rally in this short a period of time is usually to set the stock aside and move on to something else. So the real next question at this stage is whether or not that is actually true, or are the stock's fundamentals and the company's actual book of business such that there could still be some value-based opportunity for investors? Let's go ahead and let's take a look at those metrics. Free cash flow, which is one of my favorite metrics for DuPont, is extremely high and has seen some modest improvement over the course of the last year. It was about $10.8 billion a year ago and has since increased to its level below $11.4 billion. That translates to a really interesting free cash flow yield of 33.78, which is a lot higher than we usually see for most companies, and certainly even those in the materials sector. Company also has a generally healthy balance sheet. However, there is a little bit of a different picture being painted here right now. A year ago, cash and liquid assets were just a little bit below $5 billion, and they have decreased since then to their current level at about $1.75 billion. That also marks a decrease from just barely below $5 billion in the most recent quarter. So they've spent a little over $3 billion just in the last 3 months. That's especially interesting when you compare cash and liquid assets against the company's long-term debt, which sits at around $7.7 billion in the last quarter. That's also not too far from its level over the past year when it was $7.74 billion. The company's generally increasing free cash flow has a counter to it, and we can see that when we look at the company's operating profile, which I like to measure by focusing on net income as a percentage of revenues. Over the last year, that number was a very, very healthy and very high 38.06%. But it declined in the last quarter to 10.43%. Now, by itself, a margin profile of almost 10.5% is pretty healthy. However, the decline from 38 to 10 does suggest that the company is operating less efficiently than it has. That confirms the decrease in cash that we see over the last quarter. It doesn't automatically mean that there's trouble on the horizon, but this does represent a concern that is worth watching in the quarters ahead. This is a stock that pays a generally useful dividend. It's not extremely large as a percentage of the stock's current price, but at $1.44 per share, that does equate to a little under 2% of passive income every year on an annualized basis. The really interesting thing is that despite the rally that we've been seeing over the last 2 months in the stock, its value price based on my fair value analysis, sits a little bit below $235, and that's not a typo. That suggests that from the stock's current price, there is about 211% of upside from that 75.50 stock price right now. Now, a move to that high a level would certainly take a long period of time. It's also worth noting that the stock's all-time high is at around $109 per share. The stock reached that point in 2019 before the pandemic hit. That means that 235 may not really be attainable, but certainly with the stock at around 75.50 and its all-time high at around $109, that does suggest that there could still be some upside for long-term investors who are willing to be patient and consider this an overall good value. The next question, of course, comes back to how much reward to risk is there right now in the stock if you are going to go ahead and think about taking on the stock as a new position. Let's dive into those numbers. Let's talk first about how much opportunity there is left. When we're talking about reward to risk, reward is how much room there still is to where the stock could be going. With the stock at around 75.50, it does look like there should be next resistance at around $77 based on this pivot high that we see in early October. That's not too far from the stock's yearly high at around $78 per share, which means that even under the best circumstances right now from a very short-term standpoint, there is about $2.50 of upside for the stock. Now let's talk about how much downside there may be. If the stock were to reverse off of its current price at $75.50, the first question becomes, where should current support lie? I like to use previous pivots as much as I can when I try to analyze these levels, and we do see a pivot low here in mid-August that I think would work. If I draw a straight line from there to the stock's current price, that puts it at around $74 per share. I can also look at previous pivots down here a little bit below 73. I'm going to call that 72.50 as a secondary support level if 74 doesn't hold. That's also not too far from where the stock's 20 and 200-day moving averages lie, which adds additional credence to those levels as a likely support point. That means that from 75.50, there is about $1.50 of downside to first support and about $3.50 if that doesn't hold. That means that you've got reward to risk of 2.5 to 1.5. Under the best circumstances, we want to see 2 to 1, and 2.5 to 1.5 is not good enough. If we have 1.5 of risk, we would want to see 3 of upside. So this doesn't pass muster in terms of short-term opportunities. Does that mean that if you're looking for a value-based opportunity, you shouldn't work with this stock right now? I'm not so sure about that. There is an interesting value-based case to be made right now. And if you're willing to accept the likelihood of some short-term volatility between $77, $74 per share right now, you can go ahead and take advantage of that and go ahead and buy the stock now. Just remember, you're going to need to be patient. A higher probability opening would occur if the stock were to break above 78. And with the stock's all-time high up at around 109, that would probably offer a better overall long-term opportunity. For now, though, DuPont certainly looks like an interesting opportunity. It's worth putting in your watch list and keeping track of it to see if we can see some additional momentum pushing up above $78. Thanks, everybody. I hope you enjoyed this video as always. If you do like my content, please go ahead and click here to subscribe to my channel. You can always click on this video to learn more about my Rebel income system and the analysis methods that I use. You can also subscribe to my trading alerts and reports by visiting my Patreon page. The link to that is in the description for this video. Thanks, everybody. Happy holidays. Talk to you again soon.